Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Dennis Dick, and we have a long-time veteran of Wall Street on the line, Ralph Acampora. He's the director of technical analysis for Altaira Wealth Management, a long-time bull. Ralph, how you doing today?
Fine, Joe. How are you?
Good. Thanks for coming on. Before we go into the market, I just we follow a lot what's going on in the after hours and pre-market trading, and you have a stock like Deckers that reports some earnings. I can't remember. Obviously, some people thought they were good and some people thought they were bad. You had a 10-point range or a 15% move in the stock just off one quarter's numbers. I mean, just related to all your experiences and all the time that you've spent on Wall Street, does that send a signal to you or make you a little bit worrisome about the overall market?
Yeah, well, it does and it doesn't, and I'm not trying to avoid the answer. This market has been difficult, and I'm speaking brutally honest with you. It's the fluctuations I see, not only in the market but in individual stocks. I think it has a lot to do with the trading that we're doing today. I'm not going to blame it all on high-speed trading, but I think there's a lot of that, and there's a lot of nervous money. So you're going to get this volatility. If you can't handle the volatility, you can't handle the heat, stay out of the kitchen. So I think you're going to see more of this, unfortunately.
What are your thoughts on the overall market? Because we've been talking about this on the show, I feel like for the last 2 years, is that every time we pull back 1, 2, 3%, the buy the dippers come back in and they just bring this market right back up to the highs. Last night we were trading down 7, 8 S&P futures overnight, and they come right back in overnight and they buy it back up. These buy the dippers just keep coming back into this market. What's going to shake them? What's going to shake this, market from, this buy the dip mentality?
You're absolutely right, and I'm one of the guys that has been a little frustrated with the volatility because obviously we need a nice correction to get rid of the excesses that have developed. Having said all of that, it's part of the trading range that we're in, and as long as the buyers come back in down to 3%, you got to play the game. You got to be a lot more sector and stock specific, but I think it'll become obvious to us when that buying on the dips doesn't work. So far, it has been working, so I can't fight the trend. I go with the flow. I think it's going to take some kind of a serious news. I hope it's not geopolitical, but something crazy like maybe Greece leaving the Union, or I think rates when they start going up, I think it would scare the market a little bit, and I think that's out there. It's probably around September sometime.
Okay, Ralph. I mean, looking at the reason that you have this buoyancy in the market, and I mean, I guess you could I don't know if you want to call it blame it on the Fed, but where else are investors? Where else are people going to put their money? You can't get anything on interest rate bearing. I mean, CDs. I mean, it's just a forgettable term. You could go out a couple years and get a half a basis point, but you have stocks like 3.5. That pay 2, 3, 4.5%. Your Verizons and your AT&Ts and even your Exxon Mobil's. I mean, they have like really been a substitute for interest. For make any kind of money or any kind of interest on your money. I mean, is that the way you're interpreting it?
I totally agree with you. If you're looking, you're flying at 30,000 feet and you're looking down and say, where am I going to put my money? You sure in heck don't want to be in bonds long term, because over time, let's face it, rates will go up eventually. And I think as an investment, I don't think that's an area you want to be longer term. So you zero down into equities. And, I got to say, with all of this volatility, 40% of the S&P sectors, that's consumer staples, financials, healthcare, and technology, look very, very good here. And the two areas that stand out that don't look all that attractive is airlines and railroads. Might even throw a couple of utilities in there. So if you're sector and stock specific, I still think you can do very, very well.
Well, Ralph, what are your thoughts here? Because the transports, like you're saying, the railroads, the airlines, they don't look good. And a lot of times, there's the old Dow theory that when the railroads and when the transports aren't doing well, that's not good for the overall economy. What are your thoughts here? Can the, stock market keep moving up if it doesn't have the transports?
Yeah, I'm an old Dow theoretician. I think the theory has worked extremely well over the years. In 2007, and forgive me if I don't have the exact dates, the latter part of 2007 to early 2008, Dow theory was screaming there was a problem. Because not only did they not confirm one went to a new high, the other one didn't. That was in 2007, but they did break down together. What we have now is something like happened in the year 2000. When we started the new millennium, January of 2000, the first week of the new millennium, year 2000, the Dow Industrial makes an all-time new high, and the transports did not confirm. And for the next, I'm going to say almost 12 months, a trading range developed, and then the market broke down. So we're about 5 months into this non-com. The transports peak on December 29th. 2014. So we're about 5 months of this divergence. We can go a few more months before it shows some real signs. But to answer your question, yes, there is an indication that there could be an economic problem. And let's face it, you can make all sorts of excuses why airlines are having problems because of fluctuation in crude prices, the cost of their fuel, and there's a lot of competition and all. But when I look at railroads, gosh, they look terrible.
Yeah.
Kansas City Southern, Norfolk Southern, Union Pacific, and they haul things. So I think you got to be looking over your left shoulder. There's something wrong economically.
Ralph, going on talk, you mentioned crude oil there, and we had the big drop, and just historical standards had never seen that kind of move and that kind of breakdown. Did you think that would have been a little bit more boost to to the market that really would have taken off on that? But I mean, it did. It did hurt some of the big oil stocks, which are big components in the index. But I think it's just been kind of a muted response. The retailers that were supposed to benefit as much didn't seem to. What's your take on the recent oil move and oil moving forward?
Well, that big breakdown, correct me if I'm wrong, I think the bulk of it was last year, 2014. The market didn't do too badly last year. So I think the decline in oil benefited. In fact, that's when the airlines took off because they benefited from lower crude. Right now, the question is, has it bottomed? And honestly, it looks like it has, at least for a while. It's been doing rather well, and I have a target around 68 still visible in light crude.
Question from the chat here, Ralph. We got Sheldon McIntyre asking, is the new semiconductor breakout for real? If so, what are your thoughts on the potential upside? So what do you think of the semis?
That's a great question. So I just looked at the components in there. Yes, the semis, that was a real breakout. You had stocks in there. Well, Altaira, I think there's a takeover.
Some play out.
Okay. But Broadcom, Cirrus Logic, Analog Devices, Interdigital, Linear Technology, MKS Instruments, NVIDIA, Teradyne, and Xilinx look fabulous technically. And they were the cause of the breakout. So it's pretty broad-based within the SOX index, that strength. Yeah, so I think there's more to come on the upside.
Ralph, let's talk about some individual stocks here. And, the big dog right now, Apple Computer. Carl Icahn has a $240 price target on it. Thinks the company should be, buying back more stock or making some strategic acquisitions. Do you really think that, buying back stock, which a lot of companies are doing right now at elevated prices, do you think that, he's proposing for the company to do you think that's the best route to pursue?
Maybe for some companies, I'd say longer term probably that is a fairly good strategy, but it doesn't apply to every situation. In the case of Apple, it's been consolidating for the better part of this year, somewhere between 122 and like 132, 133. I think it's poised for one big breakout to the upside. So for other reasons, I kind of agree with Carl. We're going higher.
So you like Apple. What are the other big ones like Google, some of these other giant tech stocks here? Do you think there's some, upside with them too?
Um, Google, Google, unlike Apple, actually has been floundering. I mean, not badly, but it's just stuck somewhere between 500 and 570 or something like that. I don't see imminent upside breakout as I do in Apple.
Moving on.
Again, as I said before, if you're going to be in the market, you have to be sector and stock specific. You can do well, but you got to be careful. There are some things that are breaking down. Or in the case of Google, just kind of flat and boring for a while.
Gotcha.
Moving on to social media stocks. I mean, you've been around the street for a long time. You've seen different sectors come and different sectors go. Here you are with social media stocks here, and Facebook has definitely been the clear winner. You've Twitter basically trading below its original IPO price. LinkedIn having its problems. So do you understand these stocks? Do you trade these stocks, or what's your future outlook for them?
Well, in the case of Facebook, I was lucky enough to get in early. I think at 35 or something like that, and I thought I was being a hero selling it out at I think 45, and I never got back in. I'm embarrassed to say, and I lost the whole move. Right now, I put Facebook in the same situation as I would Apple. I mean, it's been consolidating here. I think it's just a matter of time this thing takes off. Twitter, I don't know if I don't know the fundamentals in Twitter, but they seem to have a little bit of a problem short term. I got to tell you, this is the area to be in.
What about
Again,
LinkedIn?
be selective. LinkedIn.
What about LinkedIn? Is that one you look at there too? Because this one
What's
has
the
been in
symbol on
trouble
that?
here.
What's the symbol on
LNKD. Yeah, LinkedIn.
LNKD. Yeah, okay. Wow. Yeah, that got clipped. It's down about 196, I think. The decline it just had from 270 down to where we are now, it took a little steam out of that stock. I'd say if you're patient, you're going to see consolidate somewhere between 180 and 200, and maybe that'll turn it around. But I need some time. I had no rush to buy this one today.
Ralph, we've been on the line here with Ralph Acampora. He's Director of Technical Analysis for Altaira Wealth Management. One final question for you. You've been in the markets for a long time, and you've seen the ups and the downs and the retracements and the pullbacks or whatever. Is there anything that you try to do for yourself personally or for your clients? I mean, obviously buying puts, losing propositions. Do you short any stocks? Do you look at any of the inverse-related ETFs, or do you just kind of sweat out the down moves here and just stick with your long-term theory?
Okay. When talking or writing about the market, there are two ways of looking at it. You can be anticipatory, expecting an event, or you can be reactionary, react to the event. A lot of us, myself included, have been anticipating some kind of a correction. We're sorely frustrated. So I'm saying to people, you're going to, and this time around, because we're going to have to react to it. When it starts to break down, it'll be obvious. You'll break 50, 200, 50 and 200-day moving averages, all that good technical stuff. And I think if you're on top of it, you're not gonna get hurt. You might lose a little bit on the way out, but you're not going to get hurt because we know one is overdue, and you'll see the signs. So I think a lot of us have to react to what the market is saying. As far as what I'm doing with my clients, I really enjoy the ETFs. First of all, for a handful of ETFs, I can be literally around the world. So I like that, and I stress that the most.
We've been on the line with Ralph Acampora. He's Director of Technical Analysis for Altaira Wealth Management. Ralph, always a pleasure. Been watching you on TV for a long time.
Okay.
Love following your analysis. We'll have you on again soon.
Thank you, guys. Take care.
Thanks, Ralph.